All right. So this is the welcome to the governmental accounting class. Miss? Okay. All right. My name is Irfan Bora, and I teach here in this program, as well as I'm the director of the master's program in governmental accounting. Most of you probably didn't know that. Rutgers has, as you know, we have several different master's programs. Besides the PA program, we also have a master's in financial accounting, a master's in taxation, and a master's in governmental accounting. And I direct the master's in governmental accounting program, where I teach this class along with courses in systems areas. So, welcome to the class. It's good to see people fresh and ready to go for another semester. You know, and we'll try to make this a fun class because it's a long time to be spending in a class. And but what you'll find about this class, and I'm sure you've heard this from your other instructors, is the class is for a very esoteric subject such as this. We'll try to make it interesting and applicable to your everyday lives. So a couple of notes. I hope everyone has had a chance to review the syllabus, and everyone has had a chance to get the book. I did load the first 2 chapters of the book in the course on the Blackboard site, but that's all I have are those 2 chapters, nothing more. So hopefully people have that. Couple of other things 2 people had come up to me earlier and had said that they had electronic copies of the textbook. It's okay if you use your laptop for that reason, but I'd appreciate it if you don't have your electronic copy not to use your laptop in the class. I would appreciate that. Okay. So, so as far as the course goes, as a quick introduction, this course is about state and local government accounting and not-for-profit accounting. We'll touch a little bit on the non-profit side. We will not cover, for instance, what some of you might be interested in, which is the federal government. And we'll take a look at that in a moment itself. But the course itself is very applicable because, as you know, in the CPA exam, you really cannot pass the CPA exam without knowing governmental and nonprofit because it's almost a quarter of the exam. So it's a substantial percentage. And I think that's the point about having this class be a part of the program that you're in. So once again, as I said, I direct the master's program in governmental accounting. I'm a little bit different from the other professors you've had. I come from the practice side. I was the chief financial officer and the director of finance and management for the New Jersey Meadowlands before I took did a career change, and I'm teaching now here. So I will try to bring some of the more practical experience into the classroom. It's very important that you get that, especially for a field such as governmental accounting. Practitioners, it's great to learn from both the academicians as well as the practitioners, where it helps. I will go through some of the, most of you have probably reviewed the syllabus, and I'll go through some of these items as we go along in the class today. But basically, the course comprises of these 2 areas, state and local governments, which is the bulk of the course, and then a couple of chapters on nonprofit. We'll have a couple of exams during the semester, and I'll go through this as we go along. There are homework assignments that are due every week, and because we are trying to run this class as a hybrid course, this is where part of the class, usually have a 4-hour class, but this class, as you notice, is only 3 hours. So 1 hour of that, we're going to make it up not by my holding a live session with you on any weekday, but actually by you doing some work on the web through threaded discussions. Okay, and it's kind of fun to do that. as I was telling you, I direct the master's program in governmental accounting. It's the only totally online program at Rutgers Business School. And we have students from 25 states around the country. It's the only program of its kind in the country. And, interestingly enough, in that program, 1/3 of our students already have their CPAs. About half of them have senior level government positions. So these are people who really want to learn about government accounting, and that's what the focus is. I'm going to try to bring that focus into this classroom so you can get some practical insight into governmental accounting itself. So what we'll do is, let's go into the introduction. I will use the PowerPoints that I had given you, and hopefully, please feel free to stop me. I don't mind that if you have questions or you have something interesting to relate. Class participation is usually great. I don't like to hear myself all the time, so it would be nice to have that. And while the projector is warming up here, so let me ask you a quick question. What does governmental accounting mean to you? What does it mean? A lot of people think of, well, the one thing it does mean is a lot of money being spent, right? Correct? Okay. So whenever a lot of money is being spent, it means there has to be accountability, right? Especially if you are part of a transaction with the government, which is not a transaction where you're willingly paying them something. For instance, taxes. If you had your choice, would you pay taxes? No. And because of that reason, governments are held accountable to the citizens. And that's what we'll talk about in this first unit itself. So, couple of things that you'll find in governmental accounting, and this is what makes it difficult for some students. Now, I could tell you, and maybe I shouldn't tell you this, but I could teach you everything about governmental accounting in 1 hour. That's it. And you'll be done with the course. I could, right? But should I do it? Okay. Well, geez, I didn't know I'd get such an applause here for that, right? Right? But it's true. It really is true. And that's what I want to do is I want to go over the key concepts. And we're not going to get lost in all the other minutiae and details that are not necessary. And books are filled with that kind of stuff. So what we want to do is we're going to learn about the characteristics that distinguish governmental and nonprofit entities from for-profit entities, and you know what that is. It's one makes money, the other one is the objective, making money? No, what is it? Governments do what best? Hopefully provide services, right? Right, okay. I like this class, you have a good sense of humor, okay. And what we need to do is we need to know the bodies which are responsible for setting generally accepted accounting principles. So you've learned a lot about what? FASB, right? You're going to learn a lot about GASB now, which is Governmental Accounting Standards Board. Actually, GASB headquarters is only 2 hours from here in Norwalk, Connecticut. And Rutgers does a lot of really interesting work with them, especially with our PhD students who do a lot of work. And I might put you to work too on one of their projects, so towards the middle of the semester. And then we'll take a look at the objectives of financial reporting for state and local governments. How many different entities are we talking about? Different sectors, state and local, federal and not-for-profit. 3 entities you have to remember. Those are the 3 different areas we'll take a look at, okay? We'll take a look at what does the financial statement of a government look like. And what you'll find out is you thought corporate reports were complicated. Wait till you see government financial reports. But I will guarantee every one of you that by the time you finish this class, I sound like a salesperson, by the time you finish this class, you will understand that report, because you're not getting out of this class until you understand those reports. Okay? So that is, and we'll take a look at actually New Jersey. And that's one of the, if you looked at the syllabus, there was a comprehensive financial report project. And what I'm going to do is have the class be organized in, how many people are in this class? Like 60 students, I think? It doesn't look like 60, but let's assume there are 60. Groups of 5 to 6 people who will select a state that they'd like to do work during the entire semester, and they'll work on looking at different aspects of the report of that state throughout the semester. And we'll go through that. Okay. So that's the financial side of it itself. And we'll take, obviously, look at the financial statements. Couple of things. What you'll have to do when you look at governmental accounting is have to use both sides of your brain, and I'll tell you why. I know we all use both sides of our brains, but the reason being that you've learned what? Accrual accounting, right? You will be learning another basis of accounting, which is contrary to accrual basis. It's going to drive you crazy. You'll say, this cannot be. How about when you purchase an asset, what do? You credit a cash or some account and debit what? An asset account, right? What if I told you that was wrong in government? You credit cash, but you debit an expense account or an expenditure account. Sound crazy, right? When you borrow money, what do? You debit cash and credit some kind of a liability account. What if I said you credit a revenue account? You say you're nuts. But think about this for a moment. When governments borrow money, right? For instance, the United States Treasury, isn't it like a revenue to them? Always wonder that, right? How do they finance their operation, right? Unfortunately, that's the case, which it shouldn't be, and we'll talk about that too. So there are many differences which we'll talk about as we go through the class itself. And the accounting practices are different from business organization because the purpose is different. Governments do what? They provide services to people. Businesses do what? They sell services or goods and products, right? The other big thing is the second point, financed by resource providers who do not expect benefits proportional to the resources they provide. Think about this for a moment. And what you have to think about is, let's say you own a home and you pay property taxes. You own a $500,000 home somewhere in the suburbs, and your property tax bill comes in. You have no kids. Your neighbor has a couple of kids who go to school. Do you both pay the same taxes? Yes, we both pay the same. My property taxes are what? They're the same. This other neighbor is sending 3 kids to school, right? Which is being paid through by your property taxes. You have none. Do you get a discount on your property taxes? No. So that's what that means, is you do not expect benefits proportional to the resources they provide. Yeah.
Theoretically, though, couldn't you make the argument that by paying that tax, you expect a better school district? And even if you don't have
Yes.
your resale value.
Yeah, absolutely. And you know what? You're absolutely right. It's one side of the equation. What's your name, by the way?
Rob.
Rob. Okay. Good point. Very good. And we'll talk about this. What I want to do is I want to introduce to you the concept that some of the participants involved in government transactions are not your willing participants. They don't, if it were up to them, they'd say, well, I should really be paying only this. But that's how that works. So this by itself raises a whole lot of issues. Because if you're paying property taxes, and we'll talk about, then you need to know how the money is being spent, right? And this is where it says management has a special duty to be accountable for how resources are used in providing services. You better prove that you are doing a good job, right? Now, this is not really a big deal here, but there are basically two types of governments. Okay, if somebody can tell me this, the answer to this question, you don't have to be in this class. I'll give you an A for the class, and you can leave. Now, how many municipalities in New Jersey? Did you say 57? 557? 565. Actually, the one was dissolved because it was so small. It only had like 10 people in it. But that's right. You have 566 municipalities.
Wow.
All right. So, but you think about New Jersey, and you have, and those are called, by the way, general purpose governments. General purpose governments are federal government. All right, guys. Yeah.
Do I get my, can I leave?
Oh, well, I'll think about it. Okay. What's your name, by the way? What's your name? Okay, great. Federal government, state governments, cities, towns, townships, villages. All right. Okay, let's calm down. So that was, and special purpose governments. We need to keep awake, right? Okay. Now, I want you to understand the distinction between the two. It's important because I could ask you a question as to whether a school, notice the school system. So basically, let me just tell you how New Jersey is organized. New Jersey has municipalities, which could be towns, cities, boroughs, and municipalities together form what? Counties. And counties, there are 21 counties which form the state of New Jersey, right? And almost every school has a school district, okay? And then we have public colleges, universities such as Rutgers. These are your special purpose governments themselves. Bless you. Okay. Can you tell me what each one of these are? Special purpose or general purpose? All right, let's do the first one itself. What's the first one? City of Columbus. What is it? How about Smithson Sewer District? How about Stockton Township? Good. How about Dover Consolidated School System? Dexter County Area Library. Okay, and Village of Wilton. Okay, you get the point, right? You get the point that that's how we, and it's important to know this because when we later on talk about financial reporting, there's a concept of financial reporting entity. And we need to know whether it's a general purpose government or a special purpose government, okay? Now, what are not-for-profit organizations themselves? And these are, there are many, many non-profit entities. By the way, what's so special about not-for-profit organizations? Yep. Well, what it is that your contributions to them, right, are tax deductible. And if they engage in certain qualified activities, they do not have to pay any tax, right? So in this case, these are usually separate organizations. They are exempt from federal, state, and local taxation. And we'll talk about this towards the end. And these are the different types of organizations that we know of. How are they different from government organizations, by the way? Where do governments get most of their revenue from? Mostly taxes, right? And where do not-for-profit get most of their revenue from? Donations, right? So you see the distinction. As if you were giving money to the not-for-profit, what would be your interest? Why? That they are doing what? Why would you give them the money? You would give them for charity, but what would you want to see? That they're using it properly, right? So they are accountable to what? The people who donate to them, right? Governments are accountable to what? The taxpayers, right? Okay, you get the distinction. Good. Okay, and this is how governmental and not-for-profit organizations differ from business organizations. Resource providers do not expect to receive proportional benefit. There is a lack of profit motive and absence of transferable ownership right. Important stuff, don't forget it. Okay? Notice that last one, we talked about the first two, absence of transferable ownership right. Can you sell a government like you can sell a business? No, it doesn't work that way, right? And that's one of the key distinctions. And there's another piece which is kind of, for governments, there's another piece, if you can think of, that business organizations don't have. What do you think? What can governments do? First of all, we talked about the power to tax, right? But the other thing is that they can borrow money at what? Tax-exempt rates, right? Does everyone understand what that means, tax-exempt rate? If you're a corporation, you go out and borrow money, right? And let's say you pay 10%, 8% interest on it. If a government goes out and borrows money, would they be paying the same 8%? No, they pay less because people who derive interest income, that interest income is non-taxable. If it's interest income from a corporate bond, it's taxable, but if it's from a government bond, it's non-taxable. That's why they can afford to raise money at a lower rate. Did everyone get a chance to look at the GASB white paper that I asked you to take a look at? It is important that you do that because it really goes into the heart of this subject itself. If nothing else, take a look at the executive summary. Make a note to do that, okay? Because this really emanates from that GASB white paper. It's in the first unit itself, by the way. And these are the distinction between, any questions, by the way, so far? So far, anybody has any questions? Okay, everybody get what I'm saying? Power ultimately rests in the hands of the people. How does that happen? Elections, exactly, right? You elect people who do what? Appoint people to run the organization itself, right? That's why it rests in the hand of the people. In the hands of the people, and people delegate power to public officials through the election process, and they're empowered by and accountable to a higher level of government and taxation. Now you look at this and you say, geez, this is an accounting course, I'm learning all these other things. Well, that's what makes government accounting different. You have to really understand the environment within which governments operate to understand the financial statements of the government itself. Okay? And in this case, this is how the not-for-profit organizations obviously don't have all of those things. They don't have the power to tax. They're only, they're accountable to those people who donate to them, and they have their own board of directors. So now a couple of other things here. I want you to take a look at this slide and see what it says in terms of what you have learned to date is about FASB. FASB applies, everybody understand the standard setting process, right? You've learned that, right? In your accounting, you have these standard setting bodies which prescribe what? Generally accepted accounting principles, right? And those generally accepted accounting principles have to be followed, because if you don't follow them, what happens? Actually, you're in trouble with your auditors, right? Because they'll give you a qualified opinion or disclaim an opinion. So just like that, we have this entity called Governmental Accounting Standards Board, which was set up back in 1984. And what happened was somebody realized that you cannot apply generally accepted accounting principles which are suited to business to governments. It just doesn't work. So this body was set up to prescribe standards for governmental entities. So for instance, if I were the chief financial officer of a public entity, when I prepare my financial statements, I don't go to FASB. I look at GASB standards and I have to follow them. If I follow them, I'm following governmental GAAP. That's the term, governmental GAAP, okay? And if I follow governmental GAAP, that means I'm working on my financial statements properly. Now, FASAB, which is the Federal Accounting Standards Advisory Board, the federal government has its own standard setting. We won't get into that. Basically, what they do is they set standards for how federal government prepares its own financial statements. Which is the world's largest reporting entity, in your opinion? The world's largest financial reporting entity. The United States government. The United States government is the world's largest federal is the largest financial reporting entity. And I'll tell you a little bit about it in a minute. But notice that, it's one of my favorite questions, by the way. Non-governmental not-for-profits and governmental not-for-profits. If it's a non-governmental not-for-profit, do you understand the difference between a governmental and non-governmental not-for-profits? For instance, City of Newark operates the museum, right? That's what? A governmental not-for-profit. You could have a private museum, right? Which is not operated by a governmental entity. Whose standards do they follow? They follow FASB standards. If it's a governmental not-for-profit, they follow what? GASB. That's really the purpose of that slide, is for you to understand the distinction between those two, okay? I thought there was a question here. Let me just see. Oh, here. See this question here? This question, can you read this question 1-4? What should the response be to that question? Which one should they follow? They should follow GASB or FASB? Okay, how many people say FASB? First of all, what is it? It's a non-governmental, so we know what is it. That gives it away, right? So it's what? It's FASB. Yeah. Okay. So simple things like that, we talk about, this is how we apply that. Okay, everybody with me so far? Good. Very important to stay awake. Okay. There are two magical words here. Stewardship and accountability. Cannot forget those words. Okay? Stewardship and accountability. When governments collect revenues or taxes from people, they need to be accountable to those people. So as a taxpayer who's not very willing, and by the way, we'll talk about that, exchange and non-exchange transactions, accountability and stewardship is very important in financial reporting. It has to demonstrate it. That has to be demonstrated in your financial statements for governments. Okay. So let's think about this for a minute. Um, You know, one thing that's different in governments is that governments tend to operate with budgets. You've heard a lot about discussion about budgets, right? What is a budget? Basically a plan to how you're going to spend and receive the funds for a period of time. But in governments, it's very important. I'll tell you how important it is. When I worked in the Meadowlands, and if we adopted a budget, if I overspent the budget, do you know it's a criminal offense, a misdemeanor, could go to jail for it. So budgets are very, very important in governments because as a device, and people who work in governments have to be very careful that they deal with budgets, which is legally adopted budget. Okay? So government financial reports are used primarily to compare actual results with legally adopted budget. People want to know, if you're going to spend $1 million, what did you spend by the end of the year? Okay? People want to know what your financial condition is, what your results of operation are, and whether you are complying with finance-related rules and regulations. And for that reason, people who work in government financial area have a special responsibility. It's more than, sometimes more than in the corporate sector because of that accountability. And unfortunately, this last piece, assist in evaluating efficiency and effectiveness, does not exist. It would be nice if it does, but that's one of the objectives. But as much as GASB has tried to bring and measure efficiency and effectiveness, governments are fighting it. They don't want to report that. Federal government does, but not state and local government. I wonder why. Right? They don't want to talk about efficiency and effectiveness in financial reports, which is kind of a shame. There we go. Accountability is the cornerstone of all financial reporting, and please don't forget this. It's in the GASB concept statement number 1, and accountability is what? Accountability to those who provide the revenues. Accountability arises from citizens' right to know. It imposes a duty on public officials to be accountable for raising monies and how they are spent. So apparently, what this implies, and I sound like a broken record, but it implies basically that if you are paying taxes, income taxes or property taxes or sales taxes, you want to know that that money is being used properly. That's what that means. And accountability is really the cornerstone of that itself. Now this is an interesting situation, which is something called interperiod equity. And unfortunately, we have some real issues in this country about this. Let me give you an example. Think about the federal government. When you think about federal government finance and they borrow money to spend, and these obligations go out for years and years, and any time money is needed, people borrow. Do you think that's right? Okay, let me ask you this question. Would you like to borrow money or use money this year that's going to be received 5 years from now? Something wrong. There's something wrong with the concept of spending money that you don't have. Right? And that deals with this issue of interperiod equity, which is what we try to do is we want to make sure that the money we raise this year is only used for paying our costs this year. Just think about this. If you are the CFO of a government organization, you could go crazy and just keep on borrowing money and just use it, right? And unfortunately, some of us do that personally, right? We borrow money but this whole, unfortunately at the federal government level, and I won't go into this because this would be like a whole class, we have intergenerational equity issue where, all this debt which is outstanding, guess somebody has to pay it. It's not me, guess who those people are? People 20 years from now will be paying for what we are spending today. Because the federal government has the ability to do what? Spend money which it does not have. Because what can it do? It can print money, literally. State governments are not allowed to do that. State governments have something called a balanced budget rule where you can only spend what you receive. But it doesn't mean that people, come up with different tricks of the trade to get around it, and we'll talk about some of those things. But this is a very, very important issue, this interperiod equity, which is that the issue that you don't want to take current year costs and have them financed through future period itself. And as you see here, accountability is also the foundation for the federal government financial reporting. And just one quick note, by the way, and we'll talk about this as we go through this. Remember when I said to you, Governmental Accounting Standards Board, that they set the rules for governmental GAAP? The financial statements which we'll see in the second half of this class, interestingly enough, those rules are only used for preparing external financial statements, not for internal statements, which people are confused. Meaning if you prepare quarterly statements, you don't have to follow GASB rules? No. If you have financial statements which need to be audited, yes. But federal government's standards are both for internal and external users. And again, we'll talk more about this as we're going through this, as we go through this through the semester itself. And these are some of the objectives of financial reporting for the federal government: budget integrity, operating performance, stewardship, adequacy of systems and controls. What you'll find is at the federal level, there's a little chart in the text which says objectives of financial reporting. And you'll see three different columns. One will be state and local government, one will be not-for-profits, and one will be federal government. The federal government has more in it than state and local government. So for instance, operating performance, that's usually not found in at the state level itself. And not-for-profit entities, organizations, again, the objective is to provide services that's in the charter itself. You want to assess management, stewardship, and performance. By the way, what does that mean, assess management, stewardship, and performance? Let me give you an example. I give to the American Cancer Society. Now, I don't know if these are the numbers. And they spend 50% on administrative costs. How do you assess management, stewardship, and performance there? Is that good? Is that a good thing? Okay. See, these are just kind of intuitive things. You don't have to be an expert in the field. It's just like common sense, right? And that's what management stewardship is, things like that. How is the money being spent, right? And stewardship, would you want the person who leads the American Cancer Association making $1 million a year? Would you like to see that? That's another aspect, right, of management. Again, I'm just going through this very briefly right now, but we'll talk about this a little bit more. Okay, Now let's talk about the general purpose external financial reporting. Let me explain this term to you. Government financial statements are prepared in two packages, literally. The book doesn't describe it, but I'm trying to make it simple for you. One is the minimum package and one is the full package. The minimum package is called minimum requirement for general purpose external financial reporting. The full package is called comprehensive annual financial reporting. So this is what's included in the, and we'll take a look at these statements, in the minimum requirements. Everybody aware of MD&A? Management Discussion and Analysis? Yeah, in governments they're required to prepare that. What is it? It tells you what's going on, what's happened during the year, how your revenues have come in, anything unusual that's happened. Now comes the tough part, and we'll talk about this in a moment. Government-wide financial statements and fund financial statements. And I haven't introduced this term to you yet, but governmental accounting is like, what's the other word sometimes people use? Fund accounting. And what you'll realize is that when financial statements are prepared in governments, remember I talked to you about accrual basis and this other basis called the modified accrual basis? Well, you can't have one set of statements which represent both. So what do you have to do? You have to prepare one set of statements on accrual basis and one set of statements on modified. Government-wide financial statements look like business type statements, and they are on full accrual basis. Those are on modified accrual basis, and we'll go through this. That's what this course is about, looking at all of that. Okay? So unlike a business where you prepare only one set of financial statements, right? You'd have a balance sheet, an income statement, a cash flow statement. Governments have many different statements. Why? Because they need to prepare each set under different bases of accounting. Okay? And notes to financial statement, I think you understand what they include. And we'll talk about RSI. These are the basic items that are required, the minimum basic. And then when you publish the full report, you are required to complement that. If you don't get this now, don't be concerned, because that's what this course is about. We're going to be talking about this. Right now, I'm giving you a very top-level view. I don't want you to get lost in the details yet. Later on, maybe, but not right now, okay? Because I want to make this as simple as possible. This thing can get pretty complicated. Our objective is to make things simple, not complicated, as we go through this course, okay? Okay, so by the way, who's interested in looking at government financial statements? I know somebody is thinking, geez, if I don't have, if I can't sleep at night, I'd get up and look at those statements. No, right? Okay, but what do you think? Who might be interested in looking at government financial statements? Give me some answers. Who might be interested? Taxpayer, yeah, they're usually the first one. Who else? Yeah. Government auditors, yeah. Who else? Clarify that. Yes, good. Creditors, good. Excellent. Yep.
Lobbyists.
Yeah, lobbyists, people who have an interest in seeing what's going on. Credit rating agencies, right? Now, I'm not going to give you this answer. I want you to think about this. If you were a taxpayer, would your interest be the same as his interest as a creditor in the government? You're a taxpayer. So as a taxpayer, what do you want to see? Lower taxes, right? He's a creditor. What's his interest? He wants solvency, which is what? More money. See that? The two different disparate interests that we have. And that happens in governments all the time. But you need to know who the principal users of government financial statements are. So we talk about taxpayers, regulatory agencies, legislative bodies, creditors, right? Credit rating agencies. These are all the folks that are interested in looking at those statements themselves. Now, let's take a look at the government-wide statements themselves. So basically, these government-wide statements are prepared. You know why they use the word government-wide? It's like consolidated statements for the entire government. And you say, what does that mean? Entire government? All right, let me give you an example. New Jersey. What does New Jersey have? Well, we have New Jersey state government, which is, is involved in many different things. Rutgers University. Is that part of the state of New Jersey? Yes. It's a component unit of the state of New Jersey. Why? Because Rutgers gets quite a bit of money from the state of New Jersey, right? How about New Jersey Transit? Yes. And that's called a business type of activity operated by the state. So what you find is that when we talk about government-wide statements, they cover the entire spectrum of the state of New Jersey. And let me give you a quick introduction to two types of things that happen in government. One is obviously the government, which runs the day-to-day function. The other one is, I said New Jersey Transit, right?
Yes.
What does New Jersey Transit always want to do? Make sure that it charges the proper fares, right, to people, so it recovers its costs, right? That is known as a business type activity. For instance, Port Authority of New York and New Jersey, when they run the airports, that's a business activity. Why? Because the purpose is to cover the cost that you incurred with the revenues that you receive. Okay? So again, government-wide statements cover the full spectrum, and the word is operational accountability. I don't want you to forget that, which is whether the government has used its resources efficiently and effectively in meeting service objectives. Because there is another type of accountability which we'll come to. Okay, and then I'll describe to you again the difference between the two. Okay, so there are 4 things that I want you to never forget from this point on. First, accrual basis for government-wide statements. Full accrual, we all know that, right? Second, flow of economic resources. And you say, what does he mean by flow of economic resources? I'll give you an example. Governments operate very much like you and I do with a checkbook. Money comes in, gets deposited, money goes out. So for example, governments, is depreciation a cash expense? Is depreciation on equipment, does it involve any cash? No. So do governments recognize depreciation? No. Does it involve cash? No. But flow of economic resources is just the way the corporate world works. If you incur an expense, whether it's depreciation or amortization, even if it does not involve cash, you recognize the expense. But as we'll shortly see, in governments we don't. And that's what drives people crazy. Recognized similar to business organizations, so operational accountability, flow of economic resources, and accrual basis. Those are the 3 things that you need to understand with this, with the government-wide, because when we go to the next part, fund financial statements, okay, so let me explain this to you, how this works. Because we're going to condense what we're going to study in the next 5 weeks into this couple of minutes. Okay, so put yourself in as a government, and you have several bank accounts. One bank account is that you use for everyday living. You have one bank account that you use for paying educational expenses. You have one bank account that you use for taking vacations. And then you have one bank account that you use for paying loans that you might have had. Why do you do that? Why not just put it all together into one? Why do people like to separate things like that? Yeah.
It's easier to break out detail, kind of drill down.
So you can literally prepare a balance sheet for each one of them, right? You've just learned fund accounting. That's how governments operate. Exactly the same way. They have a fund for everything. There's a fund for general government. There's a fund for paying off loans that they've borrowed. There are funds for specific purposes. And we'll talk about these different funds, okay? And that's what a fund is. A fund is, and we'll look at it, it's an accounting entity by itself. It's like your own checkbook. And see where it says flow of current financial resources? It's a fancy word for cash. Current financial resources are what? Cash. Okay? And that's what the basis of accounting is. It's almost like a cash basis. We don't call it cash basis, we call it modified accrual basis. But you need to understand that, and this is where some of you are going to have trouble. But I'll try to keep this as simple. You'll have to use both sides of it. Every transaction you look at, you have to decide, if it were based on fund accounting principles, how would I record this transaction? If it were based on business type of accounting, accrual basis, how would I record the transaction? Give you an example. You go and buy a building. Under accrual basis, you've just done what? Acquired an asset. Under the modified accrual basis, you've just spent the money. There is no asset. But that's why governments are required to prepare two sets so people can look at one, which shows the cost, and it shows the other, which shows the asset itself. Don't be confused. We'll talk about, as I said, we'll talk a little bit more about this. So government financial statements assist in assessing fiscal accountability. The other one was operational accountability, which is how the government raised and spent financial resources in accordance with budgetary, legal, and regulatory constraint. And as I said to you, fund revenues and expenditures are recognized on a modified accrual basis. Now, I'll give you a little secret here. When you see the word expense, it should tell you that's what? Accrual basis. If it says expenditure, it's what? Modified. An expense can never be modified accrual basis, because the definition of an expense is expiration of a cost, of a period cost of some kind, okay? So don't use these terms interchangeably. Expense is accrual basis, expenditure is modified accrual basis. And notice the last part of the sentence. Expenditures when an obligation is incurred that will be paid from currently available financial resources. So if you're going to be spending $1 million for cops this year from your budget, that $1 million better come from taxes that you levied this year, not next year or the year before. Because what is the word? Currently available financial resources. And that's what makes the job of the government accountants kind of complicated. If you want to spend money this year, you better have budgeted it this year. You can't say, oh, let me spend the money now, I'll borrow it later. And you know what an interesting example is? Think about all the snow removal costs. Did some of these governments budget that kind of snow removal cost for this winter? No, they're scrambling around to figure out how they're going to cover the shortfall for their snow removal. Is everybody still with me? Especially the people in the back. Okay. All right. I'm going to be this first chapter, 2 chapters, there's a lot of material. If you're getting lost, I know it's after lunch, but stop me. So I talked about these different bases. Now let's talk about these fund categories. So we have governmental activities. What are governmental activities? Police, fire, operating the swimming pool, recreation, health, safety. All these are what? Governmental functions. And then there are business type of activities which are classified as proprietary fund activities. Okay. So we basically have 3 types of funds: governmental funds, proprietary funds, and fiduciary funds. Proprietary funds do what? They conduct business type of activities, like what? Operation of New Jersey Transit, for instance. Okay? Operation of airports, operation of municipal swimming pools, operation of golf courses. Those are what? Business type activities. Fiduciary funds, what does it mean? Think about the word fiduciary. What does the word fiduciary mean? Kind of some special responsibility you have. A trust, right? And in this case, fiduciary funds are some of the largest funds in government. They contain pension funds, investment trust funds. There are 2 other types of funds, which I won't go into now, but the pension funds, but do the governments own those funds, the pension funds? Who owns those funds? The people who put their money into those pensions. So if New Jersey has pension funds worth $80 billion, can it say, oh, you know what, I'm running short here, let me take money from the fiduciary funds and balance my budget? No. Fiduciary funds, in fact, are even protected from bankruptcy. But, you know, with pensions, not everybody is going to be managing their own pension. In that case, the governments manage the pension and hold those funds, and that's what the fiduciary activities are. So what are the 3 activities which governments are involved in? Governmental, proprietary, which is business type, and fiduciary. Got it. Okay? Those are the 3. Now let's remember I talked to you about 2 versions of the financial report, the minimum required and then the full CAFR, and this is what you'll be working for the next couple of weeks at least. The comprehensive annual financial report. And okay, this is New Jersey's comprehensive annual financial report. This is what's published, and maybe someone will pick this date as their term project for this semester, okay? And so basically what this is the published report. It's like the annual report issued by a corporation. Here it's issued by what? State of New Jersey, right? Okay. And you know, it starts off, it gives you, notice the word fiscal year ended, June 30th, 2012. So when did the year, so apparently they don't operate from January to December. When do they operate from? July 1 through June 30th. July 1 of 2011 through June 30th of 2012. Okay. This is the table of content, and maybe you might not be able to see this, but let's see if I can. Oops. Look at the sections now. We have the introductory section, right? I don't want you, don't get lost in the details for the minute. Just look at the sections. Introductory section, financial section, right? You see the government-wide statements there? I talked to you a little bit about the fund statements, proprietary fund statements, right? RSI, required supplementary information. And then there is the statistical section itself. How long is this report, by the way? You're going to have a lot of fun. No, I'm just kidding. Okay. Okay. But basically, by the way, what it is this semester-wide project that I would like you to work on, which is what I like to do is have you, were you, for any of your courses, did you organize yourselves in groups or anything like that? Okay, maybe you could use the same group, but 5 to 6 people. And basically what it is at the end of each chapter, there's an exercise. And it asks you to go into the report, right? And look at various parts of it and respond to a series of questions. Got it? You respond to a series of questions. What I like you to do is, and this is how this project would operate, okay? So let's say there are 60 students here, and we have groups of 6, so we have 10 groups. I'd like everyone to give their group a name, so it'd be easy for me to remember. And what you'll be doing is, and I have a date, I think it's within the next few days, you have to select a state. We cannot have duplicate states. Pick out a state, and what I want you to do is pick out the state and the year for which the report is prepared. Here, what is it? June 30th, 2012. Why I say that is that some states might already have June 2013 prepared already. So here, that's what that is, okay? So everybody got that? You pick out the state, and this is how it's going to work. Since we are covering 2 chapters a week, right? You'll have 2 exercises, right? My suggestion to you is that if you're a group of 6, you basically pick, you organize yourself, you pick 2 people for 1 week who will do the work on the CAFR itself. Instead of everybody doing it, you pick 2 people who go first, or whenever their turn is, okay? And they basically post the answers to those exercises, and there's a discussion group that I'll show you here. I don't know, did you take a look at the Blackboard site where we have okay. So first, by the way, I would like you to introduce yourself to me, just so that I know a little bit. Please do that. It's important to me. CAFR presentation. This is the first one where what I like you to do is select the state, right? So just respond to that, okay? And only one person has to do it from the group itself. Then the second question, see this, the next part, examine state CAFR 1.1, okay? You're going to go in and respond to a series of questions. I mean, the questions at the start are so simple, like, what are the titles of the government-wide statements? Well, we just saw the titles. But what I want you to do is, as you respond to these questions, if the question says, is this true or false? Just don't say true or false. Say something. Just don't say yes or no, period. Don't do that, okay? Explain that. If there's some information that you found, because I'm trying to make this very manageable by having one person participate. So let's say, so you respond to that exercise by Friday midnight. You have to do that because there is a reason for this madness. Each week, Friday midnight is your first response. And then on Saturday and Sunday, everyone, again, one person from each group is required to do a subsequent posting where you might find somebody's response and might want to comment on it or ask a question. Okay? We'll get into the rhythm. It sounds a little complicated, but it really isn't. So by Friday midnight, you respond, one person responds, actually 2 people because there are 2 chapters, 1 to each exercise, and then by Sunday, there has to be a subsequent posting. If you have more postings than 1, that's fine. But I'll give you an example. So one of the questions is, government-wide statements, over how many pages, the format of the statement. Some states use one format, some states use another format, and you know, a question could be, what types of things did you see on the statement of net position? How is it different from what I have, okay? So again, it is a pretty straightforward exercise, but the important part is not everybody in the class has to participate every week. So basically in your group, you have 2 people who come forward, and then the next 2 go, then the next 2 go, and then we start again. And everybody does it, I think, twice during the semester. Questions? Questions? Please feel free to, but that's what that is. It's really, and this is the second exercise, okay? And if anything else comes to my mind, I'll talk about that a little bit. But let me just go back for a moment. See this exercise? This is the exercise. Each week you'll have this examine the CAFR exercise. Introductory section. Read the letter of transmittal. Does the material define the primary government? You'll go through it and answer the question. But as I said, just don't say, I mean, there are some places where you can say yes or no, but don't say yes or no to every single question, okay? That wouldn't be very good. But that's what that is. There are a series of questions, and that's what you will be doing. Again, any questions or, okay, we'll take a break in just a little bit. We'll be finished with this section. So okay, so these are the 3 sections that you saw: introductory section, financial section, and statistical section of the CAFR, as we call it. Instead of comprehensive annual financial report, we'll call it CAFR. And these are the parts, you know, again, you'll be spending a time on this: the title page, the content page, the letter of transmittal, which is the letter written by the CFO or the head of the organization to the reader of the financial statements, and anything else that's the management desires itself. This is the more important part, the financial section itself. They're all important, but oops. But this is, so you have an auditor's report which says whether the, believe it or not, it will tell you if the audit opinion is qualified, unqualified. You want to look at the federal government audit opinion? Let's do that for a moment, because I want you to see something. Okay, so this is the United States financial report. This is a very long report, and boy, these numbers are some pretty mighty big numbers here, okay? But what we're going to do is the United States report is actually audited by the GAO, Government Accountability Office, okay? This is their audit opinion to the President of the Senate, the Speaker of the House of Representatives. And it goes on and on, but this is what I like you to read. I don't know if you can read this. Would you believe this? That's our government. That's the opinion on the federal government financial. And this goes on and on. This is, I'm just giving you, look at some of the other things, material weaknesses. And guess who the Department of Defense? Look at the bottom. DOD, however, has consistently been unable to receive an audit opinion in its financial statements.
When was the last time they got a call?
They've never had a clean opinion. So this is serious stuff. Yeah.
Does someone want to leave the result of a certain classified program
yes, you know what, that is a good point. You said there are certain, but the controls and how you don't have to list the program. You don't have to list it because everything is still shown as an expenditure of the federal government. You just bury it somewhere in some part of an organization. But that's not, here the problem is with controls and material internal control weaknesses in the system itself. But I wanted to show you this because this is the world's largest financial reporting entity. And they have some terrific people who are working there trying to get things done right. And they work very hard. In fact, the federal standards are much more stringent than state standards are. But because of the amount of money that's spent and how it's spent, we have this type of an issue. Okay, well, we'll go back to the other interesting thing is, and we'll spend one chapter on this, which is on the audit. What you'll find is that when you think of audit, who does the audits, by the way? Mostly it's what your audit firms, right? But in New Jersey and many states, there is no external audit firm. We have the state auditor. And let me just very quickly explain this. You might say, what does it mean? If it's the state auditor, how could they be objective in the financial statements, looking at the financial statements of the state itself? Because the state auditors are accountable to the New Jersey legislature. You know, we have the three branches of government, right? Judiciary, legislative, and then the executive branch. So the legislative branch, which is represented by the state auditor, audits the executive branch so they can be independent. In fact, the former state auditor of the state teaches in our program, the public sector auditing class. And you know, there's always that question. MD&A, basic financial statements, which we'll look at, but this is the core financial section that's found in these statements. MD&A, brief objective narrative providing, again, we'll look at this in chapter 9. It talks about things that have occurred. What's the purpose of MD&A? Very simply. If you don't know how to read the financial statements, where do you go? MD&A, because what does it do? It describes things hopefully in layman's terms, right? So it will tell you, you know, we ran short of cash, we should have gotten this, we didn't. These are revenues last year, this is what it is today. So it describes it in much more layman's language. These are the two sets of financial statements, government-wide financial statements and fund financial statements. And then we have the statistical section, which shows our 10-year history of both financial and socioeconomic information, which is kind of a nice thing to have, just so you can see how things are progressing. Now, I will not spend a lot of time on this because we are not going to be really doing this. But just like state governments, we also have U.S. government-wide financial statements, and then each of the departments has its own statements. So each department has its own, and then there's a consolidated statement for the U.S. government itself. Okay. Who are the players? It's the U.S. Treasury, the Office of Management and Budget, and the GAO, which is the Government Accountability Office. Those are the three players in federal financial reporting. And this is what I was telling you, management and data deficiency. There's one interesting thing. There's a plain language citizen guide, which kind of explains things, and much better than the MD&A does. Because an MD&A is not something where you can put in anything you want. MD&A has to follow certain rules. It's not a PR piece. But a plain language citizen guide can be structured so that it's easier to read. There's also something called a performance and accountability report. And just one quick point here. What kind of information do you have in a financial report? Financial, money-wise, and non-financial, right? Those two types of information, especially in governments, you want to know non-financial. What are you getting back in return? At the state level, states are not required to present non-financial information that's required of the federal government. They present some non-financial, but really not as much. The federal government does it more, and it does it through this thing called Performance and Accountability Report. You know, if you get a chance, what you should do is, there is a statement of social insurance. And the federal, that statement that I just showed you, the report. And it's interesting because it talks about the gap in the Social Security funds. And it might be of interest to you because this is looking way ahead to see what's going to be happening to Medicare and Social Security. And that's presented in those financial statements. And that's what that is really talking about. You know, tax burden, tax gap, and challenges in the future. Okay, we're nearly there. Not-for-profit organization, again, we'll be spending a lot of time on this, and I talked to you a little bit about what the primary purpose is, to provide information to the donors, members, and creditors, and how that those resources are used, and whether they can they will continue to provide those types of services. By the way, we'll go again into these are the statements that are required of not-for-profit organizations. We'll talk more about this. Statement of financial position, which is a balance sheet, statement of activities, which is the income statement, a cash flow, and statement of functional expenses for only certain types of organization. Again, I talked to you about this. Donor-imposed restrictions. I want to show you something. These are financial statements from American Heart Association. This is a not-for-profit entity, right? Take a look at how their statements look. There's the opinion. Can you read this up on the top? Unrestricted, temporarily restricted, and permanently restricted. And this is going to be the subject of when we talk about not-for-profit organizations. What that means is, if you give a donation to a charity and you tell them you can spend it any way you want, what is it? Unrestricted, right? Okay, now you give are you with me? Okay, no, next to you, neighbor, yes. Okay, and you give a donation to a charity and you tell them, look, I'm giving you money now, but you can use it only next year. Is there any kind of restriction? Yes, but what is it? A temporary restriction, right? To time. What's a permanent restriction? Okay, I will give you money, but you know what? You can only use the interest from that money. It's what? Permanently restricted with income coming to you, right? So that's how they define, and that's why you see these different things. Again, we'll talk about this when we look at this. Okay, so since you were so attentive to this part, we are going to have some clicker fun. Do you have those? Anybody has them? All right. Please do bring them next time. If you have them, how many people have them?
Which clicker are we going to use? The ones from...
The ones that you have, whatever you have. All right. We're going to, you know what? We won't use the clickers for this session. All right? But please make sure, because I see some people don't have them here, please do bring them with you in the next class, okay? So even if you get the answers wrong, they're right, okay? Okay? All right. What's the answer to the first question? Is it true or false? Oh, okay, yeah.
False. This is GSO. False answer.
Okay. So the GSB is the body authorized to establish accounting principles for all state and local governments, both general purpose and special purpose. Anything wrong with that statement? It's true. That's what they do. It's for state and local government. They don't do it for federal government, and state and local government both include both general and, okay. Number 2. A characteristic common to governmental and not-for-profit organization is operating purpose that are other than to provide goods or services. True? No, it's true. The answer is true, right? 3. The needs of users of government financial report are the same as as those of users of business financial report. Absolutely false, right? Good. Oops. Okay. FASB, GASB, and FASAB all focus their standards on both internal and external financial reporting. Why do you say false, by the way? Who said that? Somebody said false, which is the right answer, but why did you say that? Because GASB's standards are what? More external than internal. Yep. Good answer. Number 5. Read this. True or false? Excellent. Good. So you listened. Yep. Okay, now let's get into a little bit more serious question. Uh-oh. I think this is an exam question. I shouldn't be showing you this.
That's good.
Actually, it is. Yeah, I didn't realize that I put it in there. Okay. All right. What do you think? Take your time. A, is that right or wrong? Because it says what? Federal, right? Something not right. How about C? Not-for-profit organizations? Could you have governmental and non-governmental? Right? Because this interprets it as all, right? So that's not right. Is it for both state and local government and both for not-for-profit and all not-for-profit? No. So that by process of elimination we are left with what? B. Okay? All right? Good. All right, let's take a look at the next one.
What was the answer to that? The other different thing.
I'm sorry?
What was the answer to that?
That was B, which is state and local governmental entities and governmentally related units such as utilities, authorities, hospitals, colleges, and universities. Yeah. Okay. Number you should know this, right? Which one is it? D, good. Federal Accounting Standards Advisory Board. Okay. Actually, you're doing well. That's good. Number 8. I think we talked about this, both for internal and external users. Did somebody say A? Everybody agree? Sounds good to me. Okay. Because GASB is what? Externally focused, right? Okay. Which of the following is not an objective of, the word is not an objective financial reporting by state and local governments? This is a little harder question because we, absolutely. 9 is what? Just take a moment to read that. Adequacy of systems and controls. It's for the federal government, but not for state and local government. So the answer there is A. So that was a little difficult. Okay, this one should be what are the 3 principal sections that we just went through? Right? B, which is what? Introductory, financial, and okay, and the last one, let's see. Actually, remember I talked to you about the 2 different packages? This is a hard one, but use process for elimination. Management discussion analysis, is it required for both? Yes. Government-wide statements? Yes. Notes? Yes. But this last thing, combining an individual, that's why I said we haven't gotten to it. It's a little bit more advanced question here. Combining an individual. Fund statements is the answer to that. Since you're doing so well, we'll do one more. If you don't answer this right, we will keep on going. Okay, what's the answer to this one? C. Good. All right, so this next unit, chapter 2, will delve a little bit more into the financial reports themselves, give you a little snapshot of what they look like, the different types of statements. And remember, this is where we left off, the 3 major activities, which are your governmental activities, business type activities, and fiduciary activities. We'll take a look at the 2 sets of statements, the government-wide statements and the fund financial statements. We'll examine the meaning of fund and fund accounting and the different types of funds that we have. And then there's a little technical accounting issue here, which is this concept of major fund accounting, which we'll talk about. So let's just kind of revisit this measurement focus. So whenever in accounting, when we talk about measurement focus, basically GAAP requires you to understand accounting 2 different ways. Everybody's heard of the term basis of accounting, right? So basis of accounting could be what? Cash or accrual basis. Now we have just learned a 3rd basis, which is going to be modified accrual. Then just like that, we have something called measurement focus. What does the focus, where does the focus lie in measuring the financial results? In this case, we have the economic resources, which is the goes along with the accrual basis of accounting, measures inflows and outflows of economic resources, both current and non-current. It focuses on operational accountability, which is whether the management is efficiently using its resources, and then the current financial resource, which has to do with the government reporting model itself. Here we are measuring the inflows and outflows of current financial resources. And again, don't get lost with these fancy terms. Current financial resources basically means cash that's coming in and cash that's leaving. And the focus is on fiscal accountability because budgets are so important. So what I'd like you to, from this point on, understand is not only the basis of accounting, but the measurement focus. The measurement focus for government-wide statements is operational accountability and economic resources, and for the fund financial statements, it's the inflows and outflows, which is measured through fiscal accountability itself. And again, these are words right now, but they'll make more sense as we go along. Okay. So, remember I spoke to you about expense and expenditures? Look at that, what it says. How should revenue and expenditures or expenses be recognized? Under a modified accrual basis and an under accrual basis. Okay, so this is all theoretical stuff, but it's very, very important. Go back to your commercial accounting. When we use the accrual basis of accounting, we always recognize revenues when they are earned and recognize expenses when they are incurred, right? That's your accrual basis of accounting. Under the modified accrual basis of accounting, revenues are recognized when measurable and available. That is some crazy term. Measurable and available. Let me give you an example. Measurement seems pretty simple. You know, you can measure, but what does it mean by available? Let's say you receive property taxes. Somebody was very rich and he decided to send his property taxes in advance. Instead of next year paying the taxes next year, he pays it to you right now and he gets the bill for next year. Are they available to you now, even though you've received them? Remember I talked to you about budgets? What do we want to do? You want to spend monies for the period when they are earned, right? So that's why we use the word. So even though it's measurable, but it's technically not available to us in this period. Do you see that? So that's why it's very important. And expenditures when they are incurred. Look at the definition. Expenses when incurred and expenditures when incurred. Same thing. But what you will find out very shortly is it's not the same thing. Expenditures are very, very different from expenses. Revenues are easy to deal with, but expenditures and expenses can mean different things, okay? And that's what we'll focus on. These are the three types of activities. So once again, what is governmental activity again? What are some examples? Police services, fire services, right? Parks and recreation, public works. These are all governmental types of activities, right? And then you obviously have administrative activities that are involved. And what are the business type activities? NJ Transit, New Jersey Turnpike. What are they? They are businesses. They literally operate like businesses, right? They could be electric utilities, gas utilities, airports, golf courses, as I said. And then what are fiduciary activities? They are your trusts, right, where pension trust funds are big, and we'll take a look at some other ones too. But right now, I want you to just understand the three types of activities that governments are involved in. Okay, now let's take a look at the financial statements. We are first going to look at the government-wide statements. A good word would be consolidated government-wide statements. We don't use the word consolidated. We call them government-wide for the entire government itself, okay? And we're going to take a look at this. Now this can be a little difficult diagram to figure out, but it's really not that complicated. Look at the government-wide and then the funds. There are two sets of financial statements, government-wide and fund. Then we see something called primary government, right? And we see, so the statement of net position, what types of activities does it cover? What does it show you, the statement of net position? Governmental activities and business type and this discretely presented component units, right? How about the statement of activities? What do they show? Same thing, right? What happened to the fiduciary activities? But you know what? Fiduciary activities are never shown in the government-wide statements. Why? Because they don't belong to the government. That's why they are excluded from it, okay? Now go down to the next diagram, next part of this, funds. These are based on the modified accrual basis, and we have all these funds. And they include governmental and then these things called proprietary funds, right? So what are the three different types of funds do we see? Governmental, proprietary, and fiduciary, right? Notice how it's set up? They are the fund financial statements, three types of statements. Governmental, right? Proprietary funds, and fiduciary. Top government-wide only has what? Governmental activities and something called business type activities. Okay? Business type activities is the same as that enterprise fund. See that enterprise fund? That's the other name for it. See it right under the proprietary fund, enterprise funds. So this is, again, if you don't get it now, don't be concerned. What I want you to just try and understand is what is included in each one of these sets of statements, okay? So let's go take a look at the statements themselves. This is for the city of Jacksonville in Florida. At the end of chapter 2, there are a complete set of financial statements. Don't get lost in the details. I want you to just concentrate on the major headers. What's the name of the statement? Statement of net asset. Unfortunately, or fortunately, the statement's name has been changed by subsequent GASB pronouncements. It's called now the statement of net position, but it's okay to call it statement of net assets, okay? But if you see statement of net position, that's what this is referring to. What's the other word for it, aka balance sheet, right? So it's your balance sheet. Notice how it's set up. You have governmental activities and you have business type activities. Notice that? And then you have it for component units, which just don't think about it now, but component units are independent agencies of the state. They function on their own. Rutgers University is a component unit of the state of New Jersey. State colleges are component units, okay? So that would be, the Meadowlands is a component unit of the state of New Jersey, okay? But everybody see how it's set up? You have the governmental activities and business type activities. And notice, I want you to pay attention now to the major headers. Assets, right? Capital assets, see how they're placed, right? Liabilities, right? Non-current liabilities, and then net assets. So what's the accounting equation? Assets minus liabilities equals not shareholders' equity, but what? Net assets, right? We don't call it shareholders' equity. There's no shareholders in government, right? So we call it what? Net assets that belong to the government. And net assets are further broken down into amounts that are invested in capital assets that are restricted and unrestricted. So that's the format of the statement. Assets, liabilities, and net assets. And the net assets are divided into assets, net assets that are invested in capital assets, restricted and unrestricted. 3 different components. Now let's take a look at the next statement. So we looked at the so-called balance sheet. Here we call it what? Statement of net position or net asset. Let's take a look at next the statement of activities. Now I have to tell you this. There are CPAs I have met. There are people who are very, very smart people, and they don't understand the format of the statement. Because it's a very confusing statement to look at. It's got numbers here, columns all over, but there is a reason for the madness. And let me describe to you how you can look at it and you'd never be confused. First of all, what is the title of the statement? Statement of activities. Income statement. We don't call it income statement. What do we call that? Statement of activities. We don't call it profit and loss. Governments don't make profit. Okay? We call it what? Statement of activities. Now, on the left-hand side, I want you to take a look at what's the first major heading? Governmental activities, right? We saw that before, didn't we? And what's the next one? Business type activities. We looked at that before, right? Component units. We looked at that before. See how the columns have been flipped, right? Now the interesting thing is, when you look at income statements, what does it usually start with? Revenues minus expenses, right? In governments, it's the opposite. Expenses minus revenues. Let me explain. What's the first column? Expenses, right? Go up to the header. What does it say? Revenues, right? Program revenues. It's divided into separate categories, right? But do you see that expenses and program revenues? Expenses minus program revenues equals what? That net which is shown under governmental activities. Everybody see that? Expenses minus those 3 items, which are program revenues, gives you the net. So let me ask you a question, and I know it's hard to read this, but let's say, but I think most of you can see brackets, right? Governmental activities. What does that tell you? Every single activity that the government undertook resulted in what? A loss, or expenses, expenditures being more, or expenses being more than the revenue, right? Let's take a look at Jacksonville's business type activities. Parking system. Boy, they lost money there too, because that's a negative number. See all the negatives? Look at how this shows up. See the parking, these are all their business activities. Parking system, inspection, solid waste, baseball stadium, performing arts. These are the expenses and these are the revenues, and this is the net. So this is how you read the first part of the statement. So if I didn't know anything about governmental accounting and I look at it, what did I tell you business type activities do? They're supposed to cover their costs, right? Is that the case here? Not a good situation. For governments, but then you say, wait a minute, if they are all incurring these losses, how do they finance this thing? If you keep on losing money, somebody's got to make it up. Well, now we go to the second part of the statement, which is this part of the statement, right here, starting this part. And this is classified as general revenues. And these are basically what happens is, if you looked at the statement above, you saw all the different functions of the government with expenses, because you could identify what the expenses are. But sometimes the revenues you get are not for a specific function, it's for everybody. That's what we call what? General revenues. When they are program revenues, they are specific to a program or a function. So for instance, here, the programs were general government, human services, public safety. These are expenses to that. And these were the revenues we were able to identify for them. But here, property taxes is for everybody. It's for the entire government. And that's one of the taxes are always general revenues. Okay? Utility service, these are all taxes. And look at what happens. Negative 990. All this adds up to what? 1,136,000 and still leaves you what with what? A positive of 145. So let's think about this again, not to beat this to death. You have the top part, which is very program specific, and the bottom, which is what? Basically deals with the revenues themselves. And the same thing, by the way, happens with the business type activities, which were up here. It's amazing how government accountants somehow make these numbers work so that it's positive at the end, right? Okay. See this, all this negative right here is offset by this to still produce this small number. And this number, the net assets at the end of the year, ties to that statement of net assets that I showed you before. Those are the two statements. You understand those two statements, you've got half of the story. Okay? And better still, if you can prepare those statements, you're way ahead. Okay? So what we are going to be doing is understanding how to record transactions which impact those pieces. Okay? That's the general format. Again, we're going to be looking at this more in depth. This is just a preliminary introduction to the statement itself. So what did we see? We didn't saw business activities were separated from governmental activities, right? And we had programs. Okay. So let's go back and, oops. So those were the statement of activities and statement of net position, right? Again, keep on saying this to you, but you see what that is. For the time being, there is something called internal service funds. And I'm not going to go into this because this is going to really confuse you at this point. And the book doesn't do a good job bringing it in this early. But let me just describe to you one quick thing, which is business type activities. So what were business type activities? Things that generate revenue or providing a service, right? Who are the people? The customers are outside your organization, right? What if the customers were inside the organization? When could that be? Why? How could you have internal customers? Yeah.
Taxpayers working.
No, let's say if you had a water utility, right? Or better still, let's say you had a town which did a lot of printing. They did a lot of printing work, spent a lot of money printing for some reason. Instead of sending their print jobs to Staples or some place they set up a little own shop inside the government and said, you know what, we'll send you all our print. Everybody from the government will send you the print jobs. Your customers are what? Internal. Those are your internal service activities. I'm just giving you a very simple example. And governments use that, where they could have an activity which is run out locally because it's more cost effective. And so basically you have two types of business activities, external and internal. Right? And as I said, I don't want to get into this yet because we just want to try and understand. And look at the last piece, which is fiduciary activities. They are never reported in government-wide financial statements. Why is it? It doesn't belong to the government. Could you imagine looking at the state of New Jersey? And let's take a look at the state of New Jersey, because I want you to see something. There's nothing like actually seeing this. Statement of net assets on page 26. Okay. There is the audit opinion, introduction, and actually this is what you'll be looking at this week. MD&A. Okay, there we go. These are our statements. Okay. Statement of net assets for New Jersey. See fiduciary activities here? Only what? Governmental and business type, right? Assets, non-current assets. Okay, now, if you're taking this course 2 years ago, we wouldn't have this next thing that I'm going to talk about, which is these new standards that have come up. See the word deferred outflow? And does everybody know what deferred revenues are? What are they? You receive money in advance for a sale that doesn't happen till next year. What happens? That's, you debit what? Cash and credit a deferred revenue account, right? Governments have the same thing, but they don't call it deferred revenue. They call it deferred inflow and deferred outflow. Again, we'll go into this. You know, the interesting thing about governmental accounting is that things are changing before our eyes. You don't see that happening in many accounting standards, but things are literally changing. You know, how many times do you have a standard setting body introduce new financial elements into financial statements? That's a pretty big deal, you know, and they introduce these two new elements, deferred inflow and deferred outflow. So, but this is what I want you to see. Liabilities, right? Assets minus liabilities equals what? Net asset, right? Look at this. Anything strange? What are the three parts of net asset? What's the balance in unrestricted net assets? That's right. Would you believe that? State of New Jersey has a net worth of what? Negative what? $40 billion. Right? And that's principally due to non-current liabilities, pension obligations and OPEB obligations, and other. Ever see a number, $38 billion other? Okay. And I wanted to show you this because this is how you can relate to what you're going to see. As you examine these statements, you have to, and this is why it's so important. And you know, every time I've taught this class, at the end of the class, I've had a few students who have come up and said, you know what? I never wanted to work for the government, but after taking your class, I'm thinking about it. And you know, we talk about these things, and the reason being is that we need some smart people to work in the governmental area. We need people who can, you know, who can be unfazed by politics, who can make the right decision. And not that these people are not trying hard, but we need some new blood. And we need people to be held accountable. But look at that picture. How could we have money has to come from somewhere. If you have liabilities, they have to be satisfied, right? The only way to get rid of that is by what? Reducing assets or reducing liabilities to get rid of that, right? But anyway, that's the okay, so we were here, I think. Okay. So now we take a look at the fund financial statements. And this is also one of my favorite questions. How many financial statements do you have? Well, you say, geez, I don't even know what this is. 2 governmental fund statements, 3 proprietary. Well, in the next 5 minutes, we're going to know which one these are, okay? Governmental, proprietary, and fiduciary. 3 classes, right? And it's really not that difficult because let's go back to our statements again. This is, notice the title of the statement. What is the title of the statement? Balance sheet, governmental funds. Not balance sheet governmental wide, just what? Governmental fund only, right? And then what do we have? We have assets, we have liabilities, and then something called fund balance. Instead of net position, we have what? Fund balance. Assets minus liabilities equal fund balance. Not owner's equity, but fund balance, okay? And again, we'll go through this. Tell me one thing. Look at this statement. What's unusual about this statement? Look at all the assets. Yeah. Yes, fund balance. Just like under accrual basis, it was assets minus liability equals net position. In this case, it's assets minus liability equals fund balance. See any capital assets up there? See any long-term liabilities? And this is an interesting part because remember the measurement basis, the focus, flow of financial resources. Capital assets, is that flow of financial resources? No. Capital assets are, you can't use them to exchange, to use them as cash, right? Same thing with long-term liabilities. So basically in the governmental balance sheet, you never see long-term assets or long-term liabilities. And remember, and this is what makes people go crazy. They can't understand. They look at the statement of net position, looks just like a business. They look at the governmental fund balance sheet. Half the things disappeared. What happened? Yep.
The asset side says due from the other funds.
Yeah.
Is there any intertransaction?
Yes, those are intertransactions. Yes, due from other funds. That's what that is. And actually, I'm glad you asked that question because up on the top are these special funds. These are the general fund, the special bonded. These are all listed here. And all I can tell you for the time being is each one of these funds is known as a major fund. Major fund meaning a substantially material fund. But as accountants, we just don't want to say it's subjective. What is major is subjective. Well, there is a formula for it which I'll go through in a minute as to what defines a major as opposed to non-major. Okay? So that is the balance sheet of the governmental funds. Let's look at the income statement. Actually, all right. So we had statement of net position and we had balance sheet, right? And we had a Rutgers graduate who says, I'm going to get to the bottom of this. These two different numbers. My fund balance is different from my net assets. There's got to be a way to tie those numbers. Well, there's a reconciliation that's done to tie the number, the fund balance to the net position, the two different bottom lines. This is the net asset number in the statement of net assets, and this is from the balance sheet itself. And this reconciliation is done to bring those two numbers together. And that's the reason why people get confused. Different bottom lines. Net assets are different than fund balance. So somebody says, where's the difference? Well, the difference is all here. Capital assets are not shown, and so on and so forth. Okay. let's take a look at now the income statement for the governmental funds, for the fund financial statements. What was the other statement called? Statement of activities, right? This has a long name, statement of revenues, expenditures, and changes in fund balance. And again, revenues minus expenditures equal whatever the difference is, and it goes on. It's no different than anything else you'll find, with a business, except it's prepared on a modified accrual basis. Major funds listed this way, revenue sources listed this way, but very different from the statement of activity. Those are the two major statements, fund statements for governmental funds. There's also a reconciliation between this and the statement of activity, because two different bottom lines, right? So you have to reconcile, and this goes into that. Again, this is more for Chapter 9 when we get to that. But I wanted to show you basically the sets of statements. So you looked at the government-wide statements. Now you're looking at the governmental funds. Now you're coming to the proprietary fund statements. And you know what? When we study this chapter, which is Chapter 7, you can go to sleep in the class and you won't miss anything. Why? Because it uses commercial accounting. It's no different than, there are some terms, there are some statements which looks, it's like a breeze. And again, assets, you have capital assets, you have net assets which are shown across major enterprise funds and internal service funds. Enterprise funds, customers are outside, internal are inside. Notice we don't mix them. We don't put these two together in the total. We keep internal separate from the enterprise funds. Just like the balance sheet, sorry, this is okay. Here we go, is the operating statement, the income statement. We don't call it income statement, we call it statement of revenue, expenses, and changes in fund net assets. Notice the use of the word expenses, not expenditures. Expenses. Why? Because it's on an accrual basis, right? Again, the same story. There is a format, not, nothing, no rocket science here. What are the three statements that you prepare for businesses? Balance sheet, what else? Income, and what's the third statement? Oh, let's see if there's a cash flow. Yeah, there is a cash flow too here. But to make the job of government accountants miserable, this cash flow statement is much harder to prepare because it uses a direct method to prepare the statement. But I won't ask you to do that, okay? But here, the statement of cash flows is also prepared. See how this is? Very much like a business, right? Three statements. And finally, we come to the fiduciary funds. Actually, cash flow continues. Here we go, statement of fiduciary funds. Well, it looks like Jacksonville only has two types of fiduciary funds. Pension trust, actually three, private purpose and agency. There's another one called investment trust, which we'll talk about later, okay? Look at the amount of money when you look at what would be the biggest fund that you find within fiduciary? Pension trust funds. And again, that's where most of the money is, okay? And this statement is called what? Statement of fiduciary net assets. Believe me, each of these two statements we'll spend a whole chapter on. So don't think that as I'm going through this quickly, I'm just giving you a cursory, just a quick view so you get the idea of how these things are organized, okay? For instance, we'll spend a whole chapter just on fiduciary funds. Okay? Statement of fiduciary fund, which is like your balance sheet. And then there is a statement of changes in fiduciary net asset, which is like your income statement for fiduciary funds. Okay, so let's try to get all this thing together, all the different statements. You have the government-wide statements, which cover what? Governmental activities and business-type activities, right? And what are the two statements there? statement of net position, and statement of activities. They are prepared on a accrual basis, right? Their measurement focus is flow of economic resources. They utilize operational accountability. Now let's move to the fund financial statements. What are they? They are the governmental balance sheet, the governmental statement of revenues, expenditures, and changes in fund balance, right? Those two statements. And then we have the fund statements for proprietary fund, which are the three statements, right? Statement of net assets, statement of revenue, expenses, and changes in fund balance, in net assets, and then cash flow, and then the fiduciary two statements. So how many altogether? 2 government-wide, 2 governmental funds, that's 4, 3 proprietary, that's 7, and what did I miss? Fiduciary, which is what? Another 2, plus 2 reconciliations, remember. Do you see now why the... But you know what? You'll be experts by the end of this, by the time we finish. You're going to know this stuff, but you'll know this stuff relatively well. And that's what we're trying to do is I'm giving you one side of the picture, which is the financial statements. We will go into how to record transactions, and which really leads to the next thing, which is what drives people crazy. If you have to prepare 2 sets of what do you do before you prepare a set of financial statements? Where do you get those numbers from? Trial balance, right? Right? You take it out from what? The trial balance, right? Do you have to keep 2 sets of books? One on a modified accrual basis, one on an accrual basis? Well, what we're going to do is, for the purposes of this course, we're going to assume that you are keeping 2 sets of books. But in practice, we don't do that. What we do actually is we prepare it on modified accrual basis or accrual basis and have worksheet entries which convert them into the other basis of accounting. So in practice, it's very, very different, but for our purposes, we're going to be using those 2 sets. Okay. Is everybody still here? Yes. I'll assume you are. Okay. You probably wonder why I get so excited about this stuff, right? Okay. First of all, you need to understand the definition of a fund. So what is a fund? A self-balancing set of accounts with its own financial resources, liabilities. It's like your own little company, like your own little, for whatever the purpose is. Right? Its own set of books, statements, chart of accounts. So if you want to just keep it simple, think of it like a little subsidiary, all on its own. Okay? That's what a fund is. Except it's based on flow of financial resources. These are the different types of funds, governmental funds, and we'll be spending time on this. We'll be going through each one of these funds. Let's start off with the governmental funds first. General fund, the granddaddy of all the funds. This is where everything goes through. If you don't have any fund, you'll have one general fund because government need that to operate, okay? Sometimes it's called the current fund, general fund, whatever you might want to call it, but this is where you record all the operating transactions of the government. Cost for police, fire, recreation, whatever it might be. Now we come up with special revenue funds. These are restricted or committed for a specified operating purpose, such as maintenance of roads, bridges, and operation of a library. Okay, so when you go out, fill your car with gas, part of the cost per gallon is what? A fuel tax, right? And what's that tax used for? To maintain highways and bridges and all of that, right? So could the state of New Jersey set up a special revenue fund? Yes. Where would the revenue come from? The fuel tax. And what would the cost be to repair what? Roads and bridges. Why did they do that? To keep it separate from everything else so that they could properly account for it. Hurricane Sandy, federal government sends money to the state to do work. Federal government says, give you the money, but don't mix it up with other stuff. We want it to be kept separate, and we want you to account for it separately. Special revenue fund. Put it in there. You know where the revenue came from. You spend it for that purpose. Government auditors come, look at that fund, and say, you know, everything looks good. That's special revenue fund. Dedicated for a specific task. Could you have more than one special revenue fund? Sure. Though it's not a good idea to go crazy. Okay? You know, another example would be like the casino revenue from Atlantic City. You know, they get a cut of that. So there are lots of examples there. Another piece is debt service fund. What is this? Okay, now let me just explain this to you. When governments borrow money, the people who lend them money want to make sure they get paid. And they lend them money because they know if governments get into trouble, what can they always do? Raise taxes, right? That's why they are not afraid to lend them money, right? Though we have found out that that doesn't always work with bankruptcies. But what bondholders do at the same time is they want to make sure they get paid their principal and interest right on time. And what they put into the bond covenant or the bond agreement or the bond indenture is a provision which says that you will deposit the principal and interest for repayment into a debt service fund. So when I come knocking on your door on December 31st for my payment, you're not going to say, oops, I spent it. So what they do is the general fund literally takes the principal interest that's budgeted and transfers it into a debt service fund. And the debt service fund, when principal and interest come due, pays the bondholders. So you could literally have a debt service fund for each large bond issue, though people don't do that. But that's what happens in government, is that just to make sure that bondholders get paid, it's set aside separately. So that's the purpose of debt service funds. Once the debt is paid, do you still need it? No, there's no need. You've paid it, you can close that fund. So how many did we look at so far? 3, right? General fund, special revenue fund, debt service fund. We got a couple more to go. Yep. Capital projects fund. Okay. So a government decides to build a new building. City Hall. It's going to cost a lot of money. So what do? They go out borrow money. And the money comes in and they say, you know what, because of this large project and we want to make sure things are done right, let's create like a construction fund, like a place where we can deposit these monies and track how it's being used. That's your capital projects fund. So it borrows, let's say, $1 million, puts it into what? A capital projects fund. And what does the capital projects fund do? It pays off the contractors. Once the building is finished, the capital projects fund closes. Some people think that the capital projects fund actually carries the asset. It doesn't. Once the asset is done, it's completed. So capital projects fund are used for construction of major projects by government. Okay? That's why they're called, by the way, you see their technical term, general assets, general capital assets. That's the right word. Instead of just saying capital assets, we add the word general capital assets to denote that that involves government, the governmental funds. It's because if you just said capital assets, I could ask you, are those capital assets of business activities or are those capital assets of governmental? By saying the word general, I'm telling you that's a governmental capital assets. And my favorite, permanent fund. If you want to see this in action, move to Alaska. And I really mean that. If you lived in Alaska and you made your home in Alaska, every year you get a dividend check from the government, oil money. Alaska has a permanent fund for its all oil royalties that it receives. And what it does is, so every year they get billions of dollars that's deposited into this fund. They're smart, they don't spend it. They put it in this fund. I'm sure they spend some of it, but they put it into this fund, and whatever earnings come out of those funds are distributed back to all the citizens. And maybe someone can do a little research later on, tell me what the check was each year, last year, for people who were resided in Alaska. You just get a check from government, $2,000, $3,000, whatever that number is, because that is a permanent fund, because what a permanent fund is a fund where the principal is kept intact, but the earnings are dispersed. It's like an endowment, okay? And not many states have that. That's why it's at the very end. It's for a public purpose. What's the public purpose? To give money back to all the citizens. What could be a private purpose? Well, a private purpose would be if people gave money to a town for educating children of police officers who were killed in action. It's to a specific group, right? Those are private purpose trust funds, and they are actually accounted in fiduciary fund. I don't know if you noticed that. But this is really as simple as what I just told you, the permanent fund. And those are the governmental funds. Any questions? Again, same old thing goes on and on as to understand the difference between expenditures and expenses, please. And you know what? They're not the same thing. And I'll later on give you examples of how expenses don't always equal expenditures, and expenditures don't always equal expenses. Because one is modified and other one is full accrual basis. And we'll take a look at the example. My favorite example actually is interest payment. So I'm a very clever CFO who works for government, and I need to raise some money. So I say, okay, what I'm going to do is I'm going to borrow money on April 1. So my bond is outstanding for how many months? 9 months, right? From April 1 through December 31st. So interest expense would be what? For 9 months, right? But under modified accrual basis, how many times do you usually pay interest on a bond? Twice, right? Every 6 months, right? Probably learned that in your finance course. Every 6 months you pay interest. So when's the first interest payment? If you borrowed money on April 1st, the first interest payment is October 1st, right? 6 months after you borrowed money. When's the next interest payment? April 1, right? But April 1 is when? The following year. Guess what? You don't have to do accrual in governmental funds because it's not flow of financial resources. Nothing's, even though the liability is there, but what you can do is skip 3 months of interest accrual on your books because you're using the flow of financial resources. That's the difference between modified and full accrual. Again, we'll talk more about this later on, but I wanted to explain to you how that works here. We looked at the statements already, so I won't go into this, but let's just have a little fun with some of these transactions. Look at this. The city issues a 3%, 5% note, 3-year 5% note in the amount of $400,000 to purchase a building. When you borrow money, what do you do in a transaction? You debit, and what do you credit? A liability, right? Notes payable, some kind of a liability. What do? Other financing sources, proceeds of 3 years. All I can tell you is you don't know anything about this account. This is not a liability account. This is a type of revenue account. Flow of financial resource. Money coming in. Doesn't matter how it comes in as other financing source. Take a look at another example. Same thing now under the accrual basis. This is what we're used to. Governmental activities, by the way, see the word governmental activities, that will tell you that's accrual. And if you see general fund, that's modified accrual. Let's take a look at another transaction. And this is what really blows people out, because you've expenditures, you go out and acquire an asset, but instead of debiting an asset, you are debiting an expenditure, which is called capital outlay. And you might say, why is this all happening? The easiest way to understand this is to put yourself into the picture. Think of your own checkbook. When you go out and buy a car or buy an expensive piece of furniture or whatever, you don't capitalize the asset. What do you do in your mind? That's money what? Gone, right? Works pretty much the same way, because it's based on what? Flow of financial resources. Just like you and me, that's how we operate. I don't want to call it cash basis because it's not truly cash basis, but it's very close to it, okay? Under the governmental activities, this is what you would have done, okay? And internal service fund, we went through this. These are the activities which are internal business report activities. I won't go into this too much. Enterprise funds, let me just explain to you. So proprietary funds are divided into two activities, right? Internal service fund and enterprise funds. And enterprise funds are your business type activities. These are your electric, water utilities, parking garages, transportation systems, golf courses. And sometimes you might wonder, why do governments get involved in business activities? Why not just leave it to businesses to do business activities? Yes? That's right. More, it's basically some businesses. Can you imagine riding New Jersey Transit if you had to have a rate of return for a business enterprise if it operated it? Because you know right now New Jersey Transit is subsidized by the state. Think about what that would do to the fares, right? So sometimes it's done as a subsidy, sometimes, as he said, it's done because it's just not feasible for a private enterprise to run that. But that's always a controversy. You always hear that. Always say, why is government involved in this? Why are they doing this type of stuff? Well, that's one of the reasons. And enterprise funds are your business activities. And as I said, proprietary fund common characteristics, similar to accrual basis, long-term liabilities are shown, depreciation is shown, which is not shown in the governmental funds because it's a non-cash expense. Expenses are recorded, not expenditures. And I showed you these statements already. Agency funds, let me just describe to you a couple of things here, because these are, since we're talking, I talked to you about the pension fund, and just describe to you agency fund. This doesn't really happen a lot, but it's used in other parts of the country. Agency funds are basically funds that somebody has given you to hold temporarily, which you're then obligated to pay someone else. In some parts of the country, what happens is, in New Jersey, every town collects taxes, right? They all send you a tax bill. In other parts of the country, what they do is, instead of every town doing it, there's one county which does it for all the towns to reduce the cost, the administrative cost. They receive the money, right? It goes into an agency fund, and they disperse it back to the towns that are supposed to get their share. So that's what agency funds are. That's one purpose of it. But as I said, it's not a big thing. But notice, agency funds, assets equal liabilities. There's no net position because the government has no net position in an agency fund. investment trust funds. And this is another area. And again, how do I describe this? Okay, so in New Jersey, if you were a town, you know, New Jersey has lots of, as you said, 560 some odd municipalities. Every town has a little cash that they want to invest. So rather than go to their local banker and say, hey, you know, we have this cash which we want to invest with you, what the state has done is created a cash management pool for all its municipalities and the state itself. So if you have extra cash, you wire transfer the money to the state pool, which is called the New Jersey Cash Management Fund. They get the money, they have your account, they know how much money you put in, how much money you take out, and you don't have to worry about whether the money is safe, trying to find somebody, the state does it for you. That's an investment trust fund. And notice the word external participants. State is state, external participants are other governments, which are municipalities. Those are, because that doesn't really belong to the state. What you give the money for investment to the state is really not state's, it's yours. And that's why it's shown in the fiduciary fund. And it's shown in the investment trust funds. A little complicated area, but not too difficult to comprehend. Private purpose trust funds, these are also not too large. I gave you an example. For private, as opposed to public, which were the permanent funds, private are for a specific group of people, where money's been given to you and you use it. By the way, do you see the word expendable and non-expendable? I know this is a lot of information. I can see it on your faces. You're like, okay, but we'll get better. Okay. Expendable is of trust fund where you can spend both the principal and interest. Non-expendable is a trust fund where you can only spend interest but not principal. So in one case you can give out both principal and interest, and in the other case you can only give interest, like the permanent fund. And then the biggest one of them, which are the pension trust funds, and we'll again spend some time on this, where people have deposited billions, you know, the billions and billions of dollars which the state is managing on behalf of people who are going to be receiving pension now or in the future. And the money comes in, they invest it, and then they pay these folks over a period of time, but it's kept in the fiduciary fund because it's protected from bankruptcy. They cannot go after these assets, the creditors. Just like proprietary funds, fiduciary funds also use accrual basis, flow of economic resources. So what you are finding out now at this point is that proprietary funds and fiduciary funds operate very much like a business because they use accrual basis, statements look similar, except for the governmental funds. Okay? Now, one area is major funds, and let me explain this to you. And the best way to do this is by actually taking a look at an example. Okay, first what I want you to do is, see these titles up here? General fund, special bonded debt, this, general project, and then non-major. When you see a title like these, are these major funds? If this is a non-major column, are these major then? Right? It seems obvious, right? That things which are listed in column are what? Major funds, right? So what happens is if you're an accountant working for a government, question is, which fund do you show separately and which fund do you combine with all the rest? That fund that you show separately is a major fund. And that major fund needs to meet certain criteria. And that's what we're going to talk about. Any questions so far? Okay. Now this is, and actually I think I might have given you this as a homework assignment. I'm not sure, but I might have. Okay, there are 3 funds that are shown here. And this is how you would solve that. Road tax fund, debt service fund, and capital projects fund. There are 3 funds, right? Shown there. And you have the different elements: assets, liabilities, revenue, expenditures, and expenses. The question that's being asked here is, which one of those 3 should be displayed in its own column because it's a major fund? And you say, wow, what does that mean? Well, there's some strange stuff on the right. 10% of total governmental funds, 10% of the amount of the total governmental funds, and 5% of the total of governmental and enterprise funds. Remember we saw those 2 next to each other? All right. So basically the way to determine this is that if any one of these elements exceeds 10% of that number and 5% of the following number, it becomes a major fund. And you say, I'm not totally lost. Well, let's take a look at this. Assets, road tax fund. The assets are 1,369,238. Is it more than 10% of the total governmental funds? It doesn't meet that part, right? Let's look at the liability section. Is it 172,439? Is it more than 10%? Yes. But is it more than 5% of the total governmental and enterprise funds? No. Well, that doesn't meet the test. Revenues. That doesn't meet the test, as we can see, right? How about expenditures? No, that doesn't meet the test. So what we've just ruled out is that the road tax fund is not a major fund and can be combined as part of the non-major fund. I thought it'd be easier. Now what I want you to do is just take a moment and take a look at the debt service fund and tell me what you think. Should it be reported? Does it meet any criteria? Any one of them? Which one is it?